You'll be glad to know she's recovered from trombone madness. Catherine's here with the business news. Quick check on the markets.
Gave me a headache,
right?
that trombone, it did. Yeah, the market's not giving me a headache, luckily. Across major Asian indices that we're watching, there's a bit of positivity, but also the Shanghai index falling into negative territory there since I last spoke to you, Stuart. And the Kospi in South Korea is still negative there. Last night in New York, we had a completely negative close. This is a retreat that's really eating away at gains that we saw after the fiscal cliff deal last year. It's also ahead of the earnings season in New York, which is starting fairly positively, but investors are a little bit wary of what might come.
Okay, Catherine's got an incredible story for us now from the US that shocked quite a lot of people, understandably, I think. The company that was saved by the government at the peak of the financial crisis might now sue the government over that bailout. Explain to us why.
Yes, exactly. It's a bit like, oh, thanks for saving my life, but I'm going to sue you now. AIG, this is an insurance company. It received the biggest bailout out of all the Wall Street companies in 2008, $182 billion spent by the government on rescuing this company. The idea behind that was AIG did business with hundreds of companies around the world, and the government feared that if they collapsed, then the global financial system might go under. So very serious. They took over 80% of the company under that bailout, but now the board of AIG has agreed that it is going to consider formally pursuing $25 billion worth of damages over this bailout, as you said. So this has come from an investment firm that's linked to the former head of the company. They say the government didn't give shareholders a fair deal with their 80% takeover. According to their lawyers, it's unconstitutional. But a lot of the reaction in the United States has been, this is just the most terrible ingratitude. If you hadn't had this bailout, fair or not, your company wouldn't exist at all. So it's really creating a heck of a lot of buzz.
Okay, we shall see where that one goes over the next few weeks and months. Now, here in Europe, there's a new unemployment record. You got some reaction to that news?
Yes, more than 26 million people now out of work in the European Union. The rate went up to 11.8% in November. That's the latest figures. A 19th month of increases in a row. Very uneven statistics across the EU is one of the most worrying things in a way, because people really worrying that a north-south divide is going to start opening up. For example, Greece had the biggest increase, up 7% in just 1 year. Spain has the highest overall rate, 26.6%, and we know that those two countries have had big money problems for a long time. If you look a little further north, however, we have Austria with the lowest rate, just 4.5% of unemployment, Luxembourg 5.1%, Germany 5.4%. So you can see why people are worried about a north-south divide. Enda Kenny, he's the Irish Prime Minister and currently holding the EU presidency. He says that this situation is completely unacceptable, and the Employment Commissioner has had a bit of a difficult speech to make. He's warning that poverty and social exclusion really are growing dangers, and he thinks it's unlikely that Europe will see a significant improvement in 2013.
After a few years of persistent crisis, most national welfare systems have lost much of their ability to protect household incomes against the effects of the crisis. Trade is pointed out, retail trade, as one of the sectors that have lost the highest number of jobs.
Now, Catherine mentioned Spain there. They've been writing their New Year financial resolutions. What's the plan? They need one, don't they?
They're going to borrow less this year. It's a pretty good plan, I think. It's basic. They borrowed between 215 and 200. They're going to borrow, between 215 and 230 billion euros this year. They're predicting that compares to just under 250 billion euros last year. Not a massive decrease, but one all the same. Why so confident that these borrowing costs are going to come down? Well, investors are more confident in Spain. Last year, we saw that Spain's borrowing costs on international markets peaked at over 7.5% in July. Very worrying times, and we were talking about them potentially needing a bailout around that time. Now that is down to just over 5%. This is the yield on the 10-year government bond. So Spain really looking for a positive start for 2013.
And considering Spain's financial difficulties, though, our viewers might be a little bit surprised to hear that Madrid is vying to host the 2020 Olympic Games.
Yes, Olympic Games are an expensive business, as the London Games found out, because the cost of hosting those spiralled quite significantly, I think you'll remember. And Madrid is the capital of the country with Europe's highest overall unemployment rate, as I just mentioned. The government dodging an EU bailout for several months. Even the city of Madrid has had trouble financing its public spending project, but they do insist hosting the Olympics is economically viable. They're proposing to do it for a relatively small amount of money and saying it could even help the economy too. Rochelle Ferguson tells you why.
Madrid's mayor Ana Botella is convinced her capital needs and deserves the Olympic Games in 2020. Alongside other officials, she presented a 370-page bid document insisting Madrid's capable of being the perfect host.
Spain deserves these games and we need them. We need these games. We have 8 months to continue adding support for this extraordinary project, and I invite you to come together for the chance to make a dream come true after many years of work.
Spain's Minister for Culture and Sport supported Botella, underlining that the €1.7 billion project was fully in line with austerity measures.
With austerity as a standard and a guide, and while respecting our commitments, I have no doubt that the economic effect of celebrating the Olympic Games in Madrid will be positive.
Many argue Madrid's transport system is already up to the task if thousands do descend for the 2020 Games. Construction projects off the back of the Olympics could also create jobs, but some are still concerned that the city financially is simply not up to the job. In 2012, Madrid's government declared it needed to refinance €1.3 billion for the second half of the year and was under pressure to convince investors to buy its debt. Failure to do so would have meant they were dependent on a special €18 billion fund set up by central government for cash-strapped regions. Spain's unemployment increased to 25% in 2012. The Olympic Committee will need to convince the average Spaniard to get behind the project.
Let's come back here to France now. A bit of a bizarre story, really. The French budget minister facing an investigation over claims that he evaded taxes for several years. It's going to be difficult if this is proved, isn't it?
Yeah, Jérôme Cahuzac is in fact the man who's in charge of investigating other people's tax fraud more widely in France. So quite an embarrassing story for the French government, whether proved to be true or not, really. We can see there on your screen, this is the original article by the Mediapart investigative journalism website here in France. They are talking about Jérôme Cahuzac's Swiss bank account. I have to say, before we get into this, he's vigorously denying any claims of wrongdoing at all, and he is suing Mediapart for defamation, so we don't want to repeat their claims. Basically, they say that he used a Swiss bank account to evade taxes, that 2 years ago he went to Switzerland, shut that account down and moved the funds to Singapore to try and cover things up. This is now being investigated. A preliminary investigation by prosecutors could turn into a criminal case.
OK, now today here in Paris, I've seen the boards all over the place. The January sales get going. Overall, retail sales figures are down here in France, and they've been dropping, in fact, for the past 5 years. People have less money in their pockets since the financial crisis started to bite. And there's also the growing popularity, of course, of online shopping, keeping people and their wallets away from the high street.
Some of the hottest items at France's January sales. 15 million shoppers are expected over the next few days in the country's shopping centres. So far, it's been a mild winter, so this trader hopes to get rid of his backlog of coats.
There are still these downy jackets left and these parkas.
Clothing sales, including women's fashions, have been falling for the past 5 years. A fall of 2.1% in overall sales is expected this year related to 2012. The average sales budget is also down from €244 per person to 223. This large Parisian store hopes to get a quarter of its annual turnover in 6 weeks. Around 60 people have been working for 6 months on the sales.
Commercially, it's all about having a large amount of luxury products available at once. It's not a new idea, but it still works.
Another factor contributing to the decline in sales frenzy could be the bargains available year-round on the high street.
For consumers these days, it's possible to find discounts in the shops all the time, sometimes at 30 to 40% off, without waiting for the sales.
Sales can also always be found on the internet, and more shoppers have been cottoning on. 18% more now go online for their bargains than they did in 2011.
I'm amazed with Catherine Nicholson here in the studio. She's desperate to go to the sales. Catherine, thanks very much.
Desperate.
Desperate. Latest news from Cyril after the break.